Good day, ladies and gentlemen, and welcome to the Mining News on Commodity TV. This program was created on behalf of and paid for of Discovery, Arizona Sonoran, and ISO.Energy. As a notice, please. Silver is on track to reach our next price target of $46 and remains one of our top favorites in the metal sector. Silver developer and gold producer Discovery Silver performed even better. It secured a revolving credit facility with a consortium of banks that allows the company to borrow up to $250 million, with an option for an additional $100 million, subject to obtaining additional credit commitments and meeting certain other conditions. The syndicate includes the Bank of Montreal as agent and lender, BMO Capital Markets as sole book runner and co-lead arranger, and the Canadian Imperial Bank of Commerce and the National Bank of Canada as co-lead arrangers, co-syndicate agents and lenders. This gives the company greater flexibility and financial strength to rapidly develop the business. The facility runs until 15 September 2028 and is available for general corporate purposes and working capital, including financing future investments as part of the company's growth strategy. Upon completion of the agreement, Discovery will terminate its existing loan agreement with Franco-Nevada for a senior credit facility of $100 million, which was entered into on 15th April this year and was not drawn down at the time of termination. The next price target on the chart is the old high of $9 Canadian. Over a 3-year horizon, our pointed figure chart assigns the stock price target of $20 Canadian. Not so bad, I would say. Arizona Sonoran Copper announced an updated mineral resource estimate for the Cactus brownfield copper project located 45 miles south of Phoenix, Arizona. The updated and expanded MRE includes a conversion drilling program targeting near-surface material on the Mainspring property, part of the Park Celia deposit, as well as step-out and conversion drilling from the Cactus West and Cactus East deposits. The Cactus project is wholly owned by the company and is located on private land with direct road and rail access as well as power and water connections. It is at an advanced stage of permitting and is currently being advanced to a preliminary feasibility study which is expected in the fourth quarter this year. Infill drilling converted 51% of the inferred material to measured and indicated, M&I, while the overall grade of the M&I material decreased by 15% due to the inclusion of lower grade material near the surface from Park Celia South, the formerly Mainspring. The updated total MRE for the Cactus project, including primary sulfide material, now stands at 1.143 billion short tons in the measured and indicated category at 0.48% total copper per ton, called CUT, or 11 billion pounds of 5.5 million short tons of contained copper. The inferred category totals 1.7 billion pounds of copper, or 0.85 million short tons of copper in place, representing a 56% decrease due to the conversion, of course, to M&I. Importantly, 75% of the Cactus project's copper pounds are M&I leachable. At the Park Celia deposit, 100% of the near-surface low-grade copper mineralization at Park Celia South was converted to the indicated category. Changes in M&I classification from the 2024 MRE for Park Celia include a 52% increase to 514 million short tons above the operating threshold, a 31% increase in total copper to 6.3 billion pounds, and a 14% decrease in grade to 0.61% total copper, and 0.49% total soluble copper, due to the inclusion of near-surface low-grade material from Park Celia South in the indicated category. Approximately 90% of the Park Celia copper deposits in the M&I classification are leachable. That's fantastic. The Cactus West and Cactus East deposits showed mineral resource extensions through expansion and infill drilling programs to the north, southwest and depths. Changes to the M&I classification from the 2024 MRE for Cactus West and East include a 151% increase to 557 million tons above the cutoff grade and a 184% increase in total copper to 4.43 billion pounds. There was a 19% reduction in grades to 0.4% total copper and 0.2% total copper soluble, as lower grade primary sulfide mineralization surrounding and beneath the existing Cactus West pit was included. The updated mineral resource estimates will now be incorporated into the PFS 2025, expected in the fourth quarter of 2025, and 3 key areas of work: a final feasibility study, permitting changes, and project financing. which will be effectively advanced. This could lead to a construction decision by the end of 2026. The chart looks very good, and the buy signal in February 2025 has fully materialized. The trend is stable and upward, and we see the next price target here at 3.5 to 4 Canadian dollars. More good news from our topic, ISOEnergy. As you know, we love uranium. The company announced the start of its 2025 exploration program in the US, focusing on the further development of its uranium projects in southeastern Utah. The program will commence with the completion of 10 surface rotary core holes, totaling 15,000 feet on the Flatiron claims located in the Henry Mountains Uranium District, approximately 7 miles northwest of the company's former Tony M uranium mine. This initial drilling program builds on historical regional exploration work conducted by Plateau Resources in the early 1980s and represents ISOEnergy's first test phase of Flatiron. In addition to drilling at Flatiron, ISOEnergy will continue fieldwork at its Danaros and Sage Plain projects. This work aims to better define the sedimentary structure that controls mineralization at both regional and mine scale. This geological work will serve as a guide for future exploration. This will further develop the former producing mines and prepare the upcoming massive increase in uranium prices. Together with the ongoing fieldwork at Danaros and Sage Plain, this provides a strong foundation for future growth in the US. The call for a secure domestic uranium supply is growing louder, as recent discussions about expanding the US strategic uranium reserves show, and ISOEnergy is very well positioned to play a significant role as a domestic uranium supplier in both the short and long term. We are also very positive about ISOEnergy from a technical perspective. The pointed figure chart has an initial price target of 15.5 to 16 Canadian dollars and has formed a buy signal. In the longer term, we have a price target of around 31 Canadian dollars for the stock over a 2 to 3 year horizon. You can also find all the information on our Commodity TV app in German and English, as well as everything related to commodities. Please note the disclaimer. The stocks discussed are part of the SRC Mining Specialty Trading Certificate, and SRC, its employees, and myself may or may not be shareholders in the companies. Thanks for watching us, and bye-bye from Switzerland.